This is Dan Roth. I'm the editor of Fortune Digital.
This is Dan Primack, editor of Fortune's Term Sheet.
Let's deal. Secondary markets, another big topic right now in the VC world. You're seeing a lot of companies, a lot of really hot startups. Employees are starting to unload their shares on these secondary markets. The SEC is following this really closely. What's the latest? What's going on? Is everything in the clear here? Are there new rules coming out? Where are we?
Where we are is we're still in the midst of this SEC inquiry, which has been going on for months now, and it's been relatively informal. You know, everybody's gotten letters, and there's been lots of conversations, but the SEC has not yet proposed any new rules or even made any formal statements yet about these secondary markets, which continue to go on, and employees of Zynga or Facebook or LinkedIn, et cetera, continue to sell shares. So right now, it's kind of, there's this specter that something might happen, but as of now, there's no indication of what that might be or if it'll really happen. You know, it kind of reminds me, years ago, there was talk, the SEC was inquiring about so-called club deals in private equity, and everyone was concerned that there was going to be a crackdown there, and it never happened. It's possible that nothing will happen here from the SEC's perspective. I mean, again, the secondaries market has been going on for years. The only difference now is that there's electronic platforms doing it, which has kind of opened the market up to more people.
What happens, Dan, when the valuations, if the valuations start dropping on some of these startups? I mean, you have a lot of investors who are involved with the secondary markets, which are much easier to get into these days because of companies like SharePoint or Second Market. What happens when the valuations start dropping and individual investors, granted very wealthy individual investors, start deciding that they didn't have all the information they needed? Are they going to have cases? Are we going to see lawsuits popping up? What do you think is going to happen?
Well, cynically, I'll say if that happens, then they get what they deserve. I mean, it seems bizarre to me that you would be buying stock in a company that you up front know you don't understand that you have no financial insight into. I mean, at least even with penny stocks on the public markets, you can see the revenue and you can see margins, et cetera. With these companies, you know, on the Second Market or Shares Post platform, it's explicit. You know nothing about these companies except their product and what they build. All you know about Facebook is what they do and what you read in the newspaper. Now, could there be lawsuits, people saying, you know, I should have been told more information, or there was material information that the seller knew that I didn't? That's entirely possible. I think most of it's going to be frivolous. I think you'll see a lot of people who feel burned, but they kind of should have known about this going in. I mean, the argument always against these sorts of deals has been the lack of disclosure. At least the venture capital firms and the institutional investors who do these deals do it in conjunction with the company, so they get to see behind the kimono.
So, and the SEC, by just hinting about looking into these companies, are they bringing any changes? Is it possible that the SEC's oversight, watchful eye, potential rule changes, is that affecting how these secondary markets operate?
It is. I think one thing is you've heard a talk that they might extend the so-called 500 shareholder rule. So right now, if a company, for example, a Facebook, has more than 500 separate individual shareholders, it technically has to start filing financials as if it were a public company. It doesn't mean they have to trade that way, but they have to start providing financial documents, and they don't want to be doing that. There's been talk that the SEC will actually extend that out. If so, it might actually extend the amount of time these companies stay on the private markets rather than going public. So it's interesting. For all the talk that the SEC wants to provide more disclosure perhaps, or help out these private investors or get companies public, they actually might be allowing Facebook, et cetera, to stay private longer, thus enabling these private markets to survive.